what we know in particular about the sale, and maybe if you know the breakdown of also the sort of tenors we're talking about that might hit this market on Friday.
So we're looking at about $1 trillion yuan worth of bonds. It's broken down into 20-year bonds, 30-year bonds, and then about 100 billion yuan of 50-year bonds, which is, I think, the longest government bond that has been issued by the government here. And what these are announced, in the budget and in March, and this is basically meant to provide money for the central government that it can then use to support spending by local provinces and local governments across the country. The need for this, I think, was shown. The need for these new bonds was really shown by the credit data we saw over the weekend, where you saw government bond issuance fall for the first time. The second time since 2017. You saw a big slump in borrowing by households and by companies, and so the total credit data, total credit issuance in April was actually negative for the first time since 2015. Since 2005. So basically there isn't any demand for credit right now in the economy. April is very weak, and so these bonds that the government is going to, this money, the borrowed monies, the government is going to borrow by selling these bonds, is meant to make up for the slump in mortgages because of the housing crisis, the slump in demand from companies for loans because the economy is weaker.
Right. So can we expect then that the credit data, in May and June can actually expand from here? Was April going to look more like an anomaly now that we have this announcement?
I think it will. Obviously, the government bond portion of that was probably going to look a little bit better, but you did see a 98 billion yuan fall in the amount of government bonds that were sold in April, and so there has to be these bonds have to be sold pretty quickly now to really boost to fill in that hole that we saw. But it's not going to fill in the hole that you're seeing in the lending data. If people aren't willing to borrow for mortgages, household borrowing is still going to be weak. If companies aren't willing to borrow to invest, the company borrowing data is still going to be weak. So we may as well see a pickup in the government bond portion of the total social financing data when it comes out for May in early June, and then through July and through the rest of the year. But the other parts of the economy, the real economy, not just government spending, but private spending, household spending, all of those things are not going to be directly affected by these bond sales. And it really is going to take time for the government to sell the bonds, and then for them to spend the money on infrastructure and other projects, and then for that spending to filter through and actually try to boost demand. So this is a good sign. The question is, a lot of people have is, why did they wait so long to actually start selling these? But it's a good sign. But obviously, this kind of spending doesn't have an immediate multiplier.
Yeah.
Yeah, way to be seen. And while we, I guess, try and figure out the delta, the rate of improvement in the economy, James, just if you could set us up for the data that comes out this week, later on Friday, I believe, the activity numbers, just set the scene for us on what to expect from those numbers.
I think what we're expecting from those numbers is the industrial side of the economy will continue to be doing okay. We saw export data in April was pretty strong. Part of that is a price effect. Your prices have fallen, so actually exports are doing much stronger than they would have done. They did last year, but that's being undercut a little bit because prices have fallen so much. So I think the industrial side of the economy, the export side of the economy, will continue to do better. Whether the retail side of the economy also continues to improve or not, I think is the really big question. We did see better household spending over the holiday period on services and things like that, but there wasn't really a massive increase in how much people were spending. The per capita spending over the holidays was down. It was just that more people went out and spent. So I think here you're still looking at that, still continue to see that two-track kind of economy that we've seen for a long while now in China, where industrial is good or industrial is better and household is worse.